Is the following statement true or false? In the absence of taxes, bankruptcy costs, and asymmetric information, and in an efficient market, the value of the firm is unaffected by how that firm is financed. MIT Sloan Lecture Notes, Finance Theory 2, Dirk Genter, 2003. The statement is true under the specific conditions outlined. This is a core principle of the Modigliani-Miller theorem, which asserts that in the absence of taxes, bankruptcy costs, and asymmetric information, and assuming an efficient market, the value of a firm is indeed unaffected by its capital structure. The following 4 points support the argument that the statement is true. No taxes. Without taxes, there are no tax advantages to debt financing, such as interest tax shields, which would otherwise affect the firm's value. No bankruptcy costs. If bankruptcy costs are non-existent, the risk of financial distress does not impact the firm's value, regardless of its leverage. No asymmetric information. Perfect information means all investors have the same information, eliminating any adverse selection or moral hazard problems. Efficient markets. In an efficient market, all available information is already reflected in the firm's stock price, ensuring its value is based solely on its underlying assets and earnings, not its financing method. In the real world, however, Modigliani-Miller theorem's assumptions do not hold true for the following reasons. Taxes. In reality, taxes exist, and they impact a firm's value. Interest on debt is tax-deductible, which creates a tax shield that can increase the value of a leveraged firm compared to an unleveraged one. Bankruptcy costs. Firms face bankruptcy costs, which can be significant. High levels of debt increase the risk of bankruptcy, and these costs can reduce the firm's value. Asymmetric information. Information is not always perfectly symmetrical. Managers often have more information about the firm's prospects than investors, which can affect financing decisions and the firm's value. Market efficiency. Markets are not always perfectly efficient. Factors like transaction costs, agency costs, and market imperfections can influence a firm's value and its capital structure. References: Corporate Finance Institute. N.D. Modigliani-Miller theorem. Retrieved from Investopedia. N.D. Modigliani-Miller theorem. Retrieved from Springer. 2012, Experimental Evidence on the Modigliani-Miller theorem. Retrieved from